Kalyan Jewellers, which has confirmed that there was no IT raid on the company, contrary to some news reports. In a media call, the company has rubbished all the claims of an FIR being filed against the promoters. The stock is up 3%, and we have Varsha joining us to give us the key details.
Well, thanks, Mahika. So yes, Kalyan Jewellers had a key con call takeaways on the general matters, wherein they assure that they have no plans to buy aircraft, and the IT raid and inventory overvaluation rumors are actually false. They are on track to achieve their target. They have targets of 80 Kalyan and 50 Candor showrooms for FY25. There has been some changes when it comes to franchisee agreement, but that would not impact any existing franchisee. Only major change is earlier Kalyan used to invest capex and inventory used to be done by franchisee. Now agreement that is both capex and inventory will be done by the franchisee. So that's the only change in the franchisee agreement. And Kalyan, the promoter share pledge was actually carefully considered, and multiple lenders were involved for making this decision. And the Kalyan do not. So talking about the lab-grown diamonds, Kalyan does not focus on solitaire diamonds as much as, so lab-grown diamonds do not affect Kalyan's business or inventory as much as said by the management in the con call. Talking about the debt repayment, so post debt repayment, if they don't find avenues to invest the free cash flow, they're going to consider buyback. But this will be post they'll recheck whether they have anything on the track or not. Lastly, they do not receive any FIR against the company or the promoter as stated by the management in the con call.
Thank you, Varsha, for giving us all those details. Shifting focus, the rupee has fallen to an all-time low yesterday, which affected the market significantly. Earlier today, we spoke to Sonal Verma, the Managing Director and Chief Economist of India and Asia ex-Japan at Nomura, who talked about how what led this, and do listen to what she had to say.
It basically means that monetary policy in most emerging markets is getting constrained, and because of rising, currency depreciation risk and higher bond yields in global markets, financial stability actually becomes quite paramount for policymakers globally. In our case, this is coming in the backdrop of almost 1.5 years of extremely stable currency. And therefore, the currency weakness in India is not an India-specific phenomena. It is a global phenomena. We are seeing the pressures in rest of Asia as well. But RBI has been one of the, I would say, at least so far, barring the move yesterday, has seen one of the biggest FX interventions actually since October. And as a consequence, the tightness in domestic banking system liquidity, the increase in short-term rates we have seen as a result is essentially tightening banking system liquidity, and it means that the policy transmission in India is essentially constrained. So, interest rate cuts or not actually is now secondary. The starting point is that banking system liquidity is in such a deficit that any transmission from banks' perspective is not going to happen till the liquidity conditions improve. And I think that's basically bringing question marks on the growth outlook. The second is there seems to be some shift in the RBI's FX management strategy. So compared to the very heavy FX intervention, they are allowing currency to weaken a bit more, which in our view is the right strategy. Of course, that means that there will be some imported inflation in the country. And the consequent impact on the monetary policy as a result of this. And the third dynamic, which is actually a very near-term dynamic, is the US sanctions on oil and the increase in oil prices we have seen. The spillover to domestic inflation through the oil price channel may be less, but clearly the imported oil bill is going to put pressure on the current account balance, and that again feeds into the currency and potentially to inflation. So the net-net really in terms of the impact on India is that the forward outlook on growth is looking a bit more shaky. And the policy levers that are available for emerging market central banks like India are also getting constrained because of this global backdrop.